Let's get in Jim Rogers to speak about his sense of what's really happening in the commodity space right now, the US economy, and lots more. The impact, of course, which we felt on the emerging market pack as well. Jim, thanks so much for joining in. Fitch says that it may downgrade America's credit status if Congress does not increase the nation's debt limit by early August. Do you anticipate that this could be a possibility?
Of course I do. What is Fitch talking about? What are they waiting for? America's already should be downgraded. They should have been downgraded years ago. I mean, these people have gotten, the rating agencies have gotten it wrong for 10, 15 years now. America is bankrupt. What are they talking about?
Okay, given that, where do you see the dollar index headed, given that it's trading at a record low against a lot of currencies, including the Swiss franc?
Well, at the moment, I happen to be long U.S. dollars because everybody's so pessimistic about it, including me. So when I see that 95 or 98% of the people are bearish on something, I stepped in and bought. I own the U.S. dollar. I don't know how long I will own it. If it goes up, I'm sure I will sell it. If it goes down, I'll probably sell it and take my losses. But it's only because there are too many bears at the moment.
Right. Jim, European Central Bank President Jean-Claude Trichet hinted at a possibility of a further rate hike to contain inflation in Europe. Do you see a spate of tightening in the Eurozone as well, mirroring emerging markets here? And what do you believe will its effect be on the euro?
Well, I hope that he will raise interest rates. You know, I wish Mr. Trichet were running the American Central Bank. At least he knows that there's inflation in the world. You know, the Indian Central Bank is doing a better job. The European Central Bank is doing a better job than the Americans. I hope he raises interest rates. It'll be good for Europe. It'll be good for the world.
Right. You know, Jim, a lot was anticipated from the OPEC in terms of a production output hike that happened, but no clarity came out. And for the first time in 20 years, the OPEC has not been able to come out to a decision on crude oil supplies. Do you believe the OPEC is now divided and therefore were unable to come to a consensus?
OPEC has very rarely come to any consensus. They always come to a consensus verbally and when they have public relations announcements, but they're always cheating on each other. No, I don't pay too much attention to OPEC because OPEC is running out of oil just like the rest of the world. Don't waste your time watching. I guess you have to because you got to have something on TV. But OPEC is not nearly the force it used to be. The market is much more important.
So keeping that in mind, how do you see the divisions in the OPEC affecting crude prices? Because it's really the news from there that impacts the commodity that's being actively traded across the globe.
It doesn't matter about the divisions. The world is running out of known reserves of oil. We're running out of known reserves of oil. The price of oil is going to stay high and go much, much higher. Yes, of course there will be some setbacks along the way, but we don't have enough oil. Unless somebody finds a lot of oil very quickly, the price is going to stay high and go much higher.
Our latest economic data, Jim, out of the U.S. and China has not been very positive. What do you see from there that can impact crude oil prices while you're mostly bullish on where prices are headed from here?
Well, we're having slowdowns in China. China's trying to slow their economy. The Indian Central Bank has raised interest rates. Everybody realizes that, nearly everybody realizes that there is inflation. When you try to cut back, it causes less demand, and that will have an effect. But over the longer term, the supply is also very important, and we're running out of known reserves, known supply.
Crude above $100 a barrel is seen as signaling inflation, which is maybe positive for gold and silver. Would you buy gold and silver at current levels after the volatility bout that we saw last week or the last month has kind of subsided?
Not at current prices, but if they go, well, I did buy some silver this week, but if they go down, I hope I will buy more. I don't particularly want to buy gold as near its all-time high. I'd rather for it to correct and go down for a while, and if it goes down, and if silver goes down, I will be buying more.
What about agri-commodities, Jim, particularly corn?
Well, there's more demand because people are using agricultural products for fuel. It's not efficient. It's not a good use of our agricultural products, but politicians love to reward the farmers, love to be able to say we're buying our energy from here in domestic sources. It's not good. It's not an efficient use of agricultural products. It distorts water markets. It's not good, but politicians love it.
Right, Jim, let's shift focus from soft commodities now. Various steps taken by the Chinese government to cool inflation has capped gains on metal prices. How favorable are base metal prices presently, and would you buy into any of them?
Well, I'm watching. They've all been very strong in the last year or two. I'm just watching base metal prices. If they go down, I hope I'm smart enough to buy more. I hope I'm smart enough to buy any commodities if and when they go down.
Let's talk about one more commodity, and that is sugar, which is in focus. Asia is looking at higher production of sugar and cotton for 2011. Do you see consumption matching it, or will there be a price stabilization in these commodities?
Well, I would suspect that sugar certainly will be stable and maybe even start going up, because we are burning sugar in our fuel tanks in some parts of the world, and as people become more prosperous, they want more sugar. I'm optimistic about the price of sugar over the next 3 or 4 years. Likewise with cotton. I think I'm more optimistic about sugar than cotton, but I wouldn't sell either.
Among asset classes across the board, whether it's equities, commodities, currencies, where do you see the most favorable returns coming in the near term?
My own portfolio is I'm long commodities and I'm long currencies. I have sold short emerging market stocks, and I have sold short technology stocks, and I've sold short bonds in the U.S., and I've sold short a large bank in the U.S.
Aside of that, Jim, just purely in terms of fund flows, what effect do you believe the end of QE2 would have for the global economy or for global markets in general?
Well, things are slowing down, and if you stop printing so much money, things, I hope, will slow down some more. The problem is we have an election in the U.S. in 2012, and they're going to come back and start printing money again. They may call it something else, but they'll come back and print more money. This is not good for the world, but that's all they know to do.
So what kind of impact would that have on India? I mean, the QE2 particularly on emerging markets in general and India in particular.
And your central bank is doing exactly the right thing. As I said, I wish the Indian central bank was running the American central bank. We'd all be better off. And I wish they were running the European central bank. It's good what they're doing. You've got inflation in India. Many parts of the world have inflation, and I hope they stay the course, and I hope they break the back of inflation or do their share.